Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is May 22 and we're starting from euro-dollar pair with Jakub Novak as usual. Speeches of ECB members Christine Lagarde and Isabel Schnabel were ignored by traders, while statements made by Fed Jerome Powell over interest rates caused a sharp surge in euro-dollar. This because Powell highlighted issues in the banking system and suggested that an aggressive policy may not be warranted in the future. Consumer confidence index and data on construction volume in the Eurozone are due out today. If the former shows a decline, the upside potential of the pair is likely to be limited. Long positions buy euro when the level of 1.0826 is reached, and then take profit at the price of 1.0860. Growth will be seen, but it only be a continuation of the correction that was formed at the end of last week. Nevertheless, before buying, traders should make sure that the MACD line is above zero, or is starting to rise from it. Euro can also be bought after two consecutive price tests of 1.0800. But the MACD line should be in an oversold area this time, as only by that will the market reverse to 1.0826 and 1.0860. For short positions, sell euro when the level of 1.0800 is reached, and then take profit at the price of 1.0764. Pressure will return if there is no bullish activity at the daily highs. However, when selling, traders should make sure that the MACD line is below zero, or is starting to move down from it. Euro can also be sold after two consecutive price tests of 1.0826. But the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.0800 and 1.0764. The next stage of our review is the next major. Here is pound sterling dollar pair. Sebastian Seliger presents. The GBP USD pair had made a recent low at the level of 1.2390, and the bounces are all very limited. The market is under the bearish pressure and is slowly approaching the key technical support seen at the price of 1.2386 and 1.2352. The weak and negative momentum on the H4 timeframe chart support the short-term bearish outlook for GBP as the potential of falling wedge bottom price in progress on H4 timeframe chart. Gold, sweet gold. We got a trading plan for this commodity asset presented by Dimitris Tsoupas. Early in the European session, gold is trading around 1980. Above the 21 SMA, blue line on graphic located at 1975, and below the 200 EMA in 1993. The 4-hour chart shows that gold pair made a strong technical bound after reaching the low of around 1951. It's likely that gold could continue to rise, but for this we should expect a retracement towards the 1966 zone, which presents the 61 Fibonacci of the lost bullish momentum. In the chart, we can see that gold broke sharply from a triangle symmetrical pattern. It's probable that if gold trades above 1965, there's a chance that in the next few days it could reach the 200 EMA, located at 1993, and finally, it could reach the psychological level of $2,000, and an area that coincides with the top of the downward channel formed since the beginning of the May. On the other hand, in case gold falls and break below 1960, it's expected that there will be a bearish acceleration and the instrument could reach 7-8 Muri level, located at 1937, the level that coincides with the bottom of the bearish trend channel. On May 17 and May 18, the Eagle indicator reached the extreme oversold zone, so we expect that in the next few hours there could be a technical rebound, and the price could reach the resistance zone of 1995. Our trading plan for the next few hours is to wait for a technical correction of the lost bullish impulse around 1971. Or 1966. Both levels represented as support zone, which could be viewed as an opportunity to buy with targets at 1995 and 2000 USD. Alright, but what about silver? Arif Mahmoud presents mid-term trading plan for this commodity asset. If we pay attention on the weekly chart of silver commodity asset, currently there's a few interesting things. There's a double top pattern. It's been 2 weeks that the closing price of silver movement below EMA 10. The appearance of deviation between weekly price movement of silver with OSMA indicator. Based on 3 things above, then in 2 weeks ahead, silver has the potential to depreciate down to the level of 23.04. If this level successfully broken below, then the next level to test is level 21.98. With a node on its way to those targets, this commodity asset was not corrected up and up past the level of 25.63. Because if this level is successfully penetrated above, then all the downward scenario that have been described earlier will become invalid. And finally, here's Laurie Bailey with AUD-USD pair forecast. Let's have a look. On Friday 19, the Australian dollar stopped rising due to the target resistance at 0.6670. and the balance indicator line. This morning, the price tested the target level again. The Marlin oscillator is not trying to grow, so the price may linger for some time in the 0.6628 and 0.60x70 range before deciding to break through its upper or lower boundary. The nearest bullish target is 0.6697 and the nearest bearish target is 0.6567. On the 4-hour chart, the price shows the intention to reverse from the resistance of 0.6670, which was reinforced by the balance indicator line, red line on graphic. The Marlin oscillator, which entered the positive area on Friday, is reversing. Now, the 0.6628 and 0.60x70 becomes an area where the price can freely move. As for further movement, the price needs to overcome one of the limits of this range. On the daily chart, the MACD line at 0.6697 coincides with the MACD line on the H4 timeframe chart, also the 0.6697, which strengthens this level and defines it as the limit of the corrective growth. That's all for today. See you online soon. Goodbye.